gentlemen, welcome to the second part of Istanbul Talks Fintech 2016. So we will have another keynote speaker. Let me introduce him to you, please. He is Alastair Lukies, and UK Prime Minister's Business Ambassador for Fintech, also Chairman of Innovate Finance. He will share his perspectives on how technology transforms the way business is done and the future of Fintech industry. He founded Monetize in 2003. During his time as CEO, Monetize grew to a market cap of $2 billion, also employing 1,500 staff on 4 continents. So Alastair, please, stage is yours. Thank you.
Oh, I need my zapper. Better not forget this. So otherwise you just have to listen to me with nothing to look at. Well, ladies and gentlemen, and esteemed guests, it's a really genuinely great pleasure to be here today. The vibrancy, the atmosphere, the quality of the delegates and the event that you've put on is truly incredible. So congratulations, and it's a really great community you have forming here, and that's really, I suppose, what Fintech is all about. It's about communities. We have a golden rule in the payments industry that 10% of a big number is a lot better than 100% of nothing. And that is really the way that we think about how the Fintech market is going to evolve. We've heard a lot today about the history of money, so I'm not going to spend a lot of time on this. I think what I would point out is that if you look at each one of these innovations, each one of these changes in the way that people interact with money or value, as we've seen in many other industries, Moore's law is starting to take effect. And so, historically, innovation in money has been driven by an industry, by regulation, and consumers have really had to put up with what they're given. And if you think about some of the innovations that are going on in Fintech today, the complete opposite is true, because it's consumer-driven, it's about access, and of course technology is what is providing that access. So when we see these accelerations in all industries, it is very easy for people to think, here's the next frenzy. The Amazon moment that happened to retail is going to happen in financial services. The Uber moment of getting a taxi is going to happen. The Apple moment that happened to music is going to happen. And there's no question at all that the reinvention of financial services, which is what we're talking about here today, is going to happen, but it won't be one moment. And the reason it won't be one moment is because it's people's money. It's not Crazy Frog ringtones. It's not a new app that is a Java game that if it doesn't get delivered or it doesn't work when you receive it, it doesn't really matter. It's people's money. And that's really important to all of society, not just the privileged few. So there is an enormous responsibility for everybody involved in Fintech to treat this with the respect that it's due. If you look at how the UK has evolved, the UK banking and payments market has evolved, over the past 4-5 decades, we were a market that had 4, and then 5, but that was it, big clearing banks, big high street banks that decided what product you as a consumer were going to be able to get access to. There's a branch. You can come and see your bank manager in the branch whenever you like. Well, we don't really mean whenever you like. We mean from Monday to Friday, from 9 a.m. in the morning till 4:30 in the afternoon, and there's going to be a break for lunch because we want to go and have a sandwich. That's not exactly always on financial services. You can send a check, and when you send the check in the post, maybe that check will clear within the next few weeks. Not very helpful for my cash flow. You can go to an ATM and take money out of the hole in the wall, but we're going to limit the transaction types that you can do at an ATM because we don't want you queuing up at the ATM to pay your bills or to play the lottery or to send money to family and friends. Internet banking is going to be this enormous revolution. and then you look back at internet banking the way the banks did it, and all it was the same products and services being delivered down a different channel. And that's not really innovation. That's just banks waiting until the last minute to provide you the services that they're being told they have to provide to you. And that is going to change, and it's going to change fast. And why is it going to change fast? Because the companies that are innovating in this space now, as well as all your good selves, have balance sheets that mean that they could buy a dozen of the top banks in the world and not blink. So banks have always been in control of their supply chain because the companies supplying to the banks have always been subservient to the banks. And that is changing, and it's an important part of the change. If we look at the industry, it's very easy to underestimate it because it's very easy to break financial services down and then apply a Venn diagram that says, here's financial services and technology is a sliver of financial services. And of course, that's completely the wrong way of looking at it. If you just look at the UK alone, $75 trillion of payments processed. That's an industry that's been built up over many, many decades. Then look at Alibaba on the equivalent of Valentine's Day in China. More volume than Amazon in the previous year in a day. So this is a seismic shift in changing the way that we interact with money, and most importantly, giving many, many billions of people access to financial services for the first time ever. And what's driving this transformational shift is the perfect storm. And of course, the perfect storm is what everybody looks out for from an investment thesis. This perfect storm is a little bit more complicated than usual. Yes, there's customer empowerment. So it's easy for us to jump up and down and say, why hasn't there been the Uber moment yet? Yeah, PayPal was created 25 years ago, and yet PayPal today still only represents sub 4% of Visa's global payments volume every year. So why are we not having this ring to rule all rings for the Lord of the Rings fans in the room? Why are we not having this app that's going to rule all apps? It's because it's people's money. So consumer engagement, you've got some of the best examples here today. Movin is a sensational business, brilliant consumer design, but riding the rails of the industry, and that's really important. And that's important because of regulatory directives. And one of the things that we're most proud of in the UK, and I would encourage Turkey to look at very closely, is what we call regulatory innovation. Actually being innovative as a regulator. We were the first country through the Treasury and the FCA, our Financial Conduct Authority, to create a sandbox. So we have an FCA sandbox where companies that are thinking of getting into fintech can come in and they can program and work on their new technology against a regulatory framework, which means that companies that would never have made it in the first place because they haven't designed their technology to be regulatory compliant don't have to waste time and money on building something that never gets to market. Yes, there is absolutely technological innovation. It's very easy to build a thesis for a business plan based on the fact that banks have legacy systems. It's not the answer. Don't just say because the banks are rubbish at doing something, we can do it better. There's a reason the banks have these very old legacy systems, because they can't drop a transaction, they can't lose your money. So understand those systems and empathize with them rather than always thinking you can go around them. And then what is making the difference is another perfect storm that happened in 2008 with a financial crash. I firmly believe were it not for that incident to have happened, we would not be here having a fintech event today. Because the banks, when they were the scale they were with the capital they had to deploy, were able to block a lot of this innovation. They don't have the capital today to block the innovation. They have a regulator that is not going to let them continue to self-regulate as they did in many markets in many parts of banking. So that's the perfect storm, and I don't think there's a better depiction of it than this. Because if you'd looked at HSBC's website 10 years ago before the financial crash, and then you thought, who's competing with them? You would have put up Lloyd's, or you would have put up Deutsche Bank, or you would have put up JP Morgan. Not anymore. Because what you've got here is piranhas biting chunks out of the bank's revenue streams. And if I take you back to 10% of a big number, being a lot better than 100% of nothing, it is extremely easy to look at this industry as a bank CEO and say, yeah, but this company you're telling me is a threat to me is only turning over $2 million, and I'm a $50 billion bank. Well, the last time we saw that mistake made is when the mobile operators let Apple, with the iPhone, come over the top of their networks, create their own payment scheme in Apple, and then give consumers the ability to buy without giving any revenue share back to the networks that have rolled out the rails in the first place. So this has happened before. We at Innovate Finance in the UK, which is the industry body for Fintech, are extremely proud to have both HSBC as a large institution and all of the companies that you see, the small companies. So as a good example, Landbay, a member of ours, we have Anthemis and Apis, the partner of Anthemis, or the new fund from Anthemis. We have Swift here today. The whole industry, from the smallest startup to the largest institutions, together under one umbrella. And that is what is leading to a very vibrant fintech environment in the UK. It's the small working with the large, it's the medium-sized businesses working together, because they understand that 10% of a big number is a lot better than 100% of nothing. And I guess if we're to start making some predictions about what this space looks like, you kind of have to think of it as changing an engine in mid-flight for the banks. Right? They don't have time to just stop. If you think of chip and PIN in the UK, the ability to confirm your transaction with a 4-digit PIN after signature, the banks resisted it for a long time, resisted it for many years until the regulator finally made them do it. And now it's being taken to America as well, and chip and PIN has been proven as a better way to do things. What the banks don't have now is time, because the innovation is so rife. So what banks are having to do is sell off certain parts of their historic platforms. WorldPay in the UK was a great example. Royal Bank of Scotland's very own merchant acquiring business, owned by one bank, spun out after the financial services crisis in 2008 for £2 billion, and then IPO'd last year in the UK for £6 billion. Only 10 years later, here's an asset that was being run as a bank fiefdom, as a bank internal division, that became a fantastic business in its own right. And the bank did very well out of that carve-out. You'll see more of those. And at the front end, and this is a thesis, I'm very interested to see whether some of these very innovative businesses that enable peer-to-peer payments or digital asset management or small business lending may suddenly decide to work with the industry rather than trying to disrupt it. Because I think a P2P platform on modern day technology, supported and sponsored by the banks, could be a really interesting initiative. So are we going to see banks sell off the old and buy in the new? And I think banks that are open to that way of thinking will probably be here in 15 years' time. Banks that try to build a drawbridge and say, I don't like this innovation, I want it to go away, will not. If we look at the Innovate Finance ecosystem in the UK, it is understandable why people say this is a complicated space, because it is very easy to just look at financial services in a bucket, in one big sphere. You have to break it down into the various areas and see how they all interconnect. And I would think, if you look at the Turkish market, which we'll talk about in a second, you will probably have tons of innovation going on that many people aren't even aware of. That innovation could be going on in your stock exchange. It could be going on behind a bank's firewall. It could be going on in BKM, one of the very innovative ATM switches in the world. So it doesn't just have to be a startup with an entrepreneur jumping up and down on telly every day telling you about this great thing that he or she is building. Innovation is happening all the time in financial services. And we're seeing many companies that were bits of technology from within banks, coming out and then becoming successful companies in their own right. So if we just go back to that perfect storm diagram and we talk about the so what, so we get it at a macro level, there is this enormous shift, and it is a reinvention of financial services. First of all, it's not a sprint, it's a marathon, okay? This is not going to happen overnight. So as you're investing, as you're looking to build businesses, recognize that most of the fintech companies that have had any penetration have taken 10 to 15 years to get properly integrated into the industry. The ATM switches took 30 to 40 years to get all of the banks to come together. Visa and MasterCard, two enormous examples of fintech innovation of their time, were started 55, 60 years ago. So it is a long game. But think about the four things we talked about. Understanding the modern day customer and how they interact with brands. It's not by mistake or coincidence that most of us, when we're watching television, tend not to jump up off the seat or the couch every time we want to try a new channel. It's called a remote control. And humankind is very used to remote controls. Banking has not been an industry where we've had a remote control before. If you think of internet banking, it was the TV screen. You had to go to it when you wanted to get in touch with your bank. You had to log in, mother's maiden name, inner thigh measurement, dog's first name, all of the different passwords that you'd forgotten. That's not consumer experience. An app on my phone using my thumb to biometrically identify myself, instantly getting my balance, that's a remote control. I'm in control. So think about consumers and the way they want to feel in control. If you're looking at technology in financial services, understand that it's got to be interconnected. If you had to get off a plane in Japan and take out a different bank card to your usual bank card and open a Japanese bank account, just be able to go to an ATM to get out some yen, the system would not work. It's because of interconnectivity below the surface that the financial services ecosystem works. So let's look for those under the surface spaghetti junctions of technology. Business models. You have to be extremely innovative in fintech to get the right business model. Because everyone talks about the curve and everyone looks back to the Facebooks and the Googles and the Apples and say, when's that moment going to happen? It just doesn't happen in financial services. If there is another pound of revenue or another dollar of revenue, another lira of revenue to go around in the supply chain, and you can take 10% of that and you can give 90% of it to the bank that owns the consumer relationship, that's a great business model. The moment you try and own the entire ecosystem, people will shut the doors. And the big question that the financial institutions are asking themselves every day is, who are my friends and who are my foes? So the decision that you will have to make as investors, as entrepreneurs, as people fascinated by the space is, what are you? Are you a friend or a foe? It fascinates me when I go to the United States, because in London, we're extremely fortunate. We have our regulator in Westminster, we have the financial services sector up the road in the city, and we have technology everywhere. So within 2 square miles, we have this fantastic hub. If you go to America, they have a regulator in Washington, they have financial services in New York, and they have technology and disruption in the Valley. And those 3 parties are not working together as well as is the case in other markets. And I think that's the opportunity here in Turkey. Because I look at this incredible country, I feel the atmosphere and the drive and the energy. I think about your geographical position, and I think about the fact that someone in this part of the world has to take a lead on fintech. Somebody in this part of the world has to say, we are working together as a nation, as big, as small, as payments companies, as banks, as entrepreneurs, to create a platform and an ecosystem that is going to change the way people manage their money in this region. And I can't think of a better country to do it than Turkey in this region. So I think we have to stop spending so much time thinking about the past. Yes, we can learn from it, but it's one of my favorite quotes that if it really was about history, we would have a lot of very wealthy librarians in the world. So I can genuinely say I've spent the last year or so in this role as Fintech ambassador, traveling around the world, spoken in many embassies and many far-flung corners of the earth, and sincerely and genuinely, and we know the Turkish market quite well, I've not been to an event or had conversations that are so vibrant but also tangible and real as I've had here. So many congratulations to all of you, and it's a great honor to be here. Thank you very much.